Mr. Rajwade, thanks so much for being with us. And to start off with, it's a fairly mixed basket when it comes to the overall Asian currencies. What is it that you're seeing for the rupee in particular, and what do you think will really be driving sentiment for the currency?
I think in many ways I'm a bit surprised at the a bit marginal appreciation of the rupee in recent days, because I think overall the macro picture does not look very promising at all. I think the inflation numbers still mean very much that each day of steadiness at around 62, the rupee is getting appreciation in real terms. We should probably have a better idea when we have the BOP data. If you recall, the Q2 BOP data, which normally used to come at the end of the third quarter, that was preponed to, my memory is 2nd December last time. So if the data is good, one should expect that data to come out any time, any day in the week, and one doesn't know whether that if it does not come out, whether that's an indicator that the numbers are not very good. So I think also as once election dates etc. get announced, the countdown will start, and the government will become a caretaker government. Meantime, of course, most governments, whether center and state where elections are there, for example in Maharashtra where I am located, I think all kind of populist measures are being announced, the pensions, the dearness allowances, and so on and so forth. So I think overall the situation is looking, there are too many question marks at the moment in my view. So I think is the BOP data, when does it get released and what kind of numbers it comes out with. I think that's going to be the most immediate issue. The second one is going to be the timetable for the election, and I suppose chances are that investors are likely to be more bullish if the polls favor a strong possibility of Mr. Modi coming. I think that's what most of the investors seem to be wanting. But it remains to be seen. I think it's a bit to call any kind of numbers on that particular issue.
Mr. Rajwade, you've been tracking the forex markets for so many years. In fact, there's virtually nothing you don't know about the forex market. But would you look at the slight depreciation that we are seeing, the weakening of the rupee that we're seeing now? Is it a reflection of the weak macroeconomic fundamentals, the high inflation, or is it that India is also joining the kind of decline that we are seeing in a number of other emerging markets, notably in the case of the ruble as well as the yuan?
Well, I think the yuan is in a completely different position to the rupee. I would not compare ourselves with China at all. China is sitting on net international investment position of something like $3 or $4 trillion. We have a net negative international investment position of the last numbers were about $300 billion. So you can't compare the currency of somebody with a foreign currency net worth which is negative 300 with somebody who has a positive net worth of $4 trillion in terms of foreign currency assets and liabilities. I think probably a more valid comparison would be that with other countries where the currency has come under a lot of pressure. They have had large current account deficits. Countries like Turkey or Argentina or South Africa. So I think we are probably more comparable to them than China, or for that matter even Russia, because Russia is let's accept, a large energy producer and exporter. Energy prices have remained quite stable for quite some time. So I think greater chances that if the election uncertainties continue. And the post-election government, of course, will have a very daunting task before it in terms of reversing growth, and to my mind, equally encouraging manufacturing, and particularly from the angle of employment creation. I think employment creation has been extremely poor, and the problem could become not just an economic issue, but very much a socio-economic problem as we go along.
Yes, you compared India with Turkey, Argentina and countries like that, and it's true, we did run large current account deficits, but we've had considerable success in getting the current account deficit to much more manageable proportions. So will that not give us some cause for comfort, and can we really be compared with them, or can we say we're better than them? Yes, we're bad, but there are many people who are worse. So if there is a rout in emerging market currencies, India perhaps will not fare so badly. Am I being unduly optimistic? Or is that a very realistic kind of assumption to make?
Well, I think you are more optimistic than I am. I think the significant part of the improvement has come because of a sharp drop in gold imports. Now, the report from the World Gold Council suggests that the total imports in India during 2013 have remained between 900 to 1,000 tons, and they have estimated that the smuggled amount of gold could be anywhere from 200 to 250 tons. Now, all the smuggled gold ultimately has to be paid for in dollars, one way or another, and I think that would affect the BOP data as we sort of go along further. Second, the gold price has also come down, and yes, that's certainly a positive factor in terms of our import bill. But the other side is that as we have seen last 2 or 3 months, export growth has come down dramatically. I think after the rupee's fall to about 62, there was significant export growth for the first 2 or 3 months. But then last couple of months, my memory is December, January, the growth seems to have stalled very significantly. Also, as I said, election uncertainties, if they come about, and the results and who would be in power and what kind of policies, I think chances are that some of the FIIs may adopt a wait and watch policies. Meantime, I think on foreign direct investment, we continue to have problems, the tax issues, the FDI in retail issues, and many other areas. So I think, yes, there is some improvement. We are probably not as vulnerable as, say, South Africa or Turkey. But I think it would be a bit premature to conclude that we are totally out of the woods.